What's going on, everybody, and welcome to the video. In this one, we're just going to go over a stock that I'm really liking and kind of how I used something I created to value it. So if you are interested in this type of content, I'll ask you to subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. But let's go ahead and kind of get straight into the video. So here's my portfolio, my passive portfolio, kind of some dividend stocks, a few ETFs in here. But looking at everything, we're going to go ahead and look at my portfolio on my spreadsheets. Here's everything you got to see. You can get all this information if you are interested. Check out the link in the description down below my Patreon. But what we're going to be doing is kind of looking at a different type of stock, not a dividend stock per se. We're going to be looking at INMD, ticker INMD, something that I do own in my growth stock portfolio. It's something that I just see a lot of upside potential in, and looking at my valuation, I see some really good stuff in it. So right now they have a PE of about 19.33. As you can see, they don't pay a dividend, and a market cap of about $3 billion. Now this company is based in Israel. I was looking at a few other things. Earnings per share over the trailing 12 months have been about $1.88. Have a pretty relatively high beta at 2.07. But looking at who this company is, you know what they are. They're a leading global provider of innovative medical technologies. They do a ton of like non-radio frequency RF things to do like surgical procedures, kind of like fixing skin, like plastic surgery, gynecology, dermatology, all these different things. They have a ton of different stuff, and they're doing very well, and they're in a very, very solid financial spot. So, I'll just kind of go ahead and show you, go to providers. They kind of sell all these different things. Their products, Body Tight, Embrace, Empower, Evoke, all these different things are kind of for clients, and they've been proven to give incredible results. So they're already getting really good reviews and customer loyalty, which is a very big thing. Let's go ahead and kind of go into how I want to value this stock. So the way we're going to be valuing this is a few different methods. If you've watched my past videos, you've probably seen me do different methods for valuing dividend stocks, but this is a little bit different. This is a growth stock. They don't pay dividends. So, you can't use the dividend discount model. You can't use a few different things that usually you would use when it comes to valuing a dividend stock. But I want to do something a little bit different and value growth stocks per se. Maybe you are just like me, you have a dividend portfolio, but you also like to invest in growth stocks. So as we're going to see, this is very simple. All you have to do is type in the ticker. It'll give you the real price and things like that. And then what you do from here is you just type in the past free cash flows for every year, numbers entered in millions. It'll automatically give you a growth rate, your average growth rate. Then you try to type in manually your future growth rate you expect the company to grow their free cash flows at. That's pretty expectable. And then maybe we'll go with like 13%, just to be a little bit more conservative. And then you'll see all the things change, the free cash flow that's expected, and you got to get the present value of these free cash flows, you get the terminal value, add all these up, then you get the sum of the free cash flows, then you go and manually input the cash and cash equivalents, get this from Yahoo Finance, whatever it is, that's what I did, their total debt, which is about $4.96 billion, and then their equity value, which is just the sum of free cash flows plus the cash and cash equivalents minus the debt, gives you $3.069 billion. Outstanding shares, they have about 83 million, and it gives you their dividend cash flow price per share. Maybe you want to give them a little bit of a discount, less of a discount rate. Now, the actual cost of capital is how we calculate this discount rate. I just kind of type in the ticker, it gives you the beta. You use the CAPM pricing model to kind of get the cost of equity. I'm just going with the AAA bonds rate method on this, and the tax rate for INMD. They don't have much debt at all, compared especially to their equity, so their WACC is about 16.44%, which is very high, but we'll go ahead and type it in. Perpetual growth rate, we'll say 2.75 on this, but if we want to kind of change that future growth rate for them to about 15%, which I do think this company could very well do, especially just with how everything's looking, I think it's a reasonable growth rate, at least for a while, but it is very, very high estimate. We'll go ahead and go with 13. And this does give us a little bit of a downside of about -2%, but this is also kind of just assuming that they have a very high discount rate because they are so high in equity. But I don't think that their discount rate is necessarily that high, just because of a few different factors. But I'm just going to go with 13% and see how much it changes, 30% upside. So we're going to go with an even 15 split, 9% upside based off the DCF valuation. Here's EPS growth. This one doesn't necessarily give you a price target. It kind of tells you where you can expect things to be, but this is all completely estimates. What you do, you just kind of type in their historical earnings per share. Same thing as the past one. It gives you the average growth rate, then you kind of expect how much you expect their earnings to grow, per year and things like that. And then you kind of get the forecast earnings per share and then your future PE estimate, if you expect the PE to be a certain price or the PE to be a certain ratio at a certain time, you can just type it in one of these boxes. And then with the current PE right here, the estimated price with those earnings, if their PE were to stay the same, here's kind of what the price would be expecting this growth rate. And if you want to assume your own PE, here's kind of what that price would be, and then the upside or potential downside that you would get with the stock. So this looks pretty solid in my personal opinion. And then we're going to go to Graham's formula. Okay, so here's calculating intrinsic value, the old formula, and then kind of got a little bit updated. The old formula gives us a really good margin of safety, saying that there's about 58% upside, while the new one says there's only negative 17% upside, so there is downside in this stock. But whenever it comes to kind of finding the final intrinsic value, I like to take the average in between these two, just because I don't think either one is necessarily more right. I think this is very strict to finding the intrinsic value, especially on a company that is more of a growth stock. But let's go ahead and look at the financial metric value. Here's a few things. Earnings per share, automatically put in. The earnings per share growth rate, and then the PE ratio. Pretty simple. You take the EPS times 1 plus that growth rate times the PE ratio. Current price $36, but this intrinsic value is relatively saying, hey, this stock should be worth $41.67, and that gives us about 13.5% upside on the stock. Then I kind of wanted to see the stock's risk. It is pretty important to take into consideration risk, especially when it comes to growth stocks. And it's pretty simple to calculate. You kind of have to estimate, what's the chances of over the next year per se that the economy is going to be like in a really good state, like, an economic boom. I said a 5% probability. I think it's going to be pretty average, so I gave it an 85% chance of that. And then I filled in 10% when things go wrong. Okay, but that exact same for both. This is kind of comparing INMD to the S&P 500. And then, historically speaking, just kind of getting some averages. When the economy just goes crazy, how well do you think the S&P 500 does? How well do you think INMD will do? And then average SPY versus INMD. And then if it were to go really well or really poor, how would they do? So you kind of just get these, and then you get your expected return, kind of using a formula. And then it automatically gives you the stock's beta. That's kind of just for visualization to kind of see how volatile it is and how risky it is per se in the eyes of the market. Then you get your variance and take the square root of that. And what you get is the standard deviation, which is the risk. So within that first standard deviation range, 68, I think it's like 68.26%, and then the second standard is like 95.25%, the third is like 99.74%. Chances the stock will be in between these ranges, mathematically speaking. So that's just kind of how it all evens out and kind of how you can see the expected returns. But then let's go ahead and look at the relative valuation. So now we use a relative valuation, kind of a comparables analysis, taking some companies that are very similar to INMD and comparing them on the PE, the price of sales, the price of free cash flow, the price to book, the price to cash per share, and the EV to revenue and the EV to EBIT. Here's all of INMDs, and here's all the averages of these. You kind of take the comparable average and you compare it to INMD. So you kind of do these calculations, and then you get the valuation that INMD should have. You kind of take that average from the average of all these combined, and as you will see, there was an upside about 209% until it did just glitch out on me. But the price to cash per share is a little bit skewed just because of how high this is. So you have to take this into consideration when it comes to finding that. But the average price, it was actually, what was it, 142. So we'll just type it in real quick. Here's where you see the final stock's value, about 66.97. And you kind of just get all these different things. So the difference is about 83% upside on the stock just based off all these averages. And then you give it a margin of safety. A good buy price would be about $53.58. And the current stock price is less than that. So this does indicate the stock is a buy, giving you about 83% upside potential. So keep that in mind. This is a very good thing. If you are interested in getting this, check out the Patreon, link in the description down below. Here's kind of just how to get it all. Very easy to use. There's a ton of different things, dividend stock watch list, everything that you could come for. Like, give me requests. I'll do my best to make it. I'm working on making a ton of other things as well right now. But thank you again for making it to the end of this video. Leave a comment below if you like INMD stock and any suggestions you have, and I will see you in the next video.